Good morning, everybody. So yesterday's, well, repeated it today just to reinforce, the comments that come out at times are an indication in of themselves. And so yesterday's comment on what's wrong with the market environment today, nothing, and there wasn't, and because everything was kicking in together, and we've been talking about anemic breath forever. That ended. And that was a heads up at the end of last week that risk is increasing. Now, as I said, it doesn't mean it's going to happen that day. And yesterday was kind of a blow off kind of a day in the short term anyway. So I picked KRE because it's got this giant wide range bar suggesting the end of the move. That being said, it broke out above this consolidation. And, now going into this void above. So this doesn't mean crash. It could come down quite a bit because I guess percentage wise, as we say, well, here's our minor support, and over here we've got unfilled gaps. Well, I don't know percentage wise what that is, but it could come down quite a bit, or it could lead to an extended period of chopping around, since this is such a positive move where whether it's short covering or whatever, it's just a monster move to the upside. And that's a wide range bar. And you can see how it closed almost at the high of the day. Whereas that one had a tail, it was an indecisive day. That one had a tail on the top, and now it's a wide range bar closing at the high. Historically, that leads to a correction of some kind. And now that it's got this void below, probably going to pull back a bit or chop around. So keep an eye on those. I think these regional banks mostly start reporting the end of this week or sometime next week. Maybe some have come out, but usually it's the big banks that come first. Morgan Stanley, J.P. Morgan, Goldman, BlackRock, and such. So this is gapping down, as you can see on the right side chart on the bottom. It's slopping around here a little bit, and I wouldn't expect it's going to collapse. I don't think so. But it is gapping down, and let's just see on the 15-minute chart. Yeah. Always. Yeah, I said it once. I've said it, thousands of times over the years. Look to the left, because anytime I see something stabilizing, I'm looking for a reason why. Look at the 15-minute chart. You can see the pivot low right there, the support. And in addition, just we look for these pivots on some platforms. They put triangles, some they put dots, whatever. It's just marking a bar with three higher lows to the left and right. We choose three. You can set it to 4, 5, 6, whatever you want. One other thing I'd point out is when you're looking at your charts and you see a bottoming tail bar. So this is also what I refer to as a correction bar, because it breaks the low. You had a wide range bar up, and it is a 1, 2, 3, 4 by definition, but the highest probability 1, 2, 3, 4s come igniting out of a base. Maybe the second leg. Whereas this one, it worked, it went up, but you got a wide range bar, you got a consolidation bar. Most of the time it's on the inside of the wide range bar. And then the 3 bar breaks below the low of that consolidation bar and closes near the high. And then it's a continuation move up. So that bottom tail bar, when you see a bottom tail bar like that, there's no pivot there. There's going to be a pivot in a smaller time frame. So say, for example, you perceive this as being climactic, and you got a red bar reversal, maybe it gapped up reversal, and you're going to short that, or you might be looking to buy. And while you might be looking for pivots, since we talk about that a lot, in a higher time frame, if you look for a bar like this, correction bar, you're going to have a pivot in a lower time frame. So that could be your focal point, even though it's not marked as a pivot because there's no 3 bars to the left. Okay, so trouble starting there, right? If you're long, it's trouble. The big trouble, the semiconductors, which have been underperforming. And we had this drop and reversal, looked like it was going to go down, and then it flipped up and up and it went. and we got the big nasty reversal day, and now, gapping down way down here. Let me move this weekly chart over a little bit. All right, gapping way down there. It's on support. See a couple of pivots there, but the size of that gap into support, it should stabilize. And that's what look, every chart we look at based on the method that we trade creates thoughts about what's happening in the moment and what will happen in the future. And then you see what actually transpires. So anytime prices gap down like that, it's a sizable gap. Let's look on the hourly chart. It's not down to the support yet. So maybe it could have continued downside action. I'm just going to put a wide area there since it's because it is wide, and apply it to all the charts. And so you can't see it here, but it applied it onto my intraday charts. It's a little distance away. So that's, again, you got to move that over, see where that is in relation. You see the size of the gap down there. So that is where if as an intraday trader, I would want to consider whether it's this, I'd use the leveraged ETF or NVIDIA, or any semiconductor that is a similar pattern as this, and then beginning to stabilize on the 5-minute chart, maybe with a wide range bar down there. I'd look for that as an intraday long and see where it goes from there. So pretty bearish. We had those leaders, and you're looking at, Microsoft was down on the day yesterday. You can see it was down. Where's that in relation to that pivot? See, it's close to the pivot, whereas that was kind of leading the way down. So theoretically, it could be one of the first to stabilize. Nonetheless, the weekly chart, you got a wide range bar breaking out and things coming down. And right now it's under the wide range bar. We'll see where it closes on Friday, but certainly that has short-term bearish implications that will come down lower. You look at NVIDIA and the others that are under pressure here. I'm curious where that is. Look, it's right on the pivot. So this might also begin to stabilize a little bit. So what we will want to do is, when we see prices come down to support, we recognize it. We've looked to the left. We say that's where buyers were before, and we expect buyers to be there again. Now we wait. In the time frame that you trade in, whatever you're going to use, 5, 15, 30 minute, whatever, you wait to see some kind of confirming pattern to your bias, and then decide what you're going to do. So if we see it down here, which we will, we see it down here, and over the next day or two, it chops around, and every time it goes up, it gets slammed back down. That's going to suggest it's going to go lower. So now we have to wait. All right. Let's get to the broader markets. Spiders, right, on those pivots on the hourly chart. You can see on the 15-minute chart, something like this. I would think it's going to come down here, right? More significant lows. See how these are higher pivot lows? And here you've got more of a consolidation. It should be a stronger support area. Those pivots, let's look at SPX. SPX, here are the numbers for today. Yesterday wasn't hit. Let me go back to that again for a second, just to see where, SPX doesn't move pre-market. So the discipline is to let the charts create the thoughts and not let my creative imagination see charts that are not there. Yeah, that's a good way to say it, Roberto, because, one of the things that we talk about in the courses is mirage trades. I was like, what's a mirage trade? It's one of those trades, in the middle of the day, you're looking for something. I'm looking for a trade. I've got to make my money. You're sitting there. Maybe you missed the move, and so now you're pressing yourself to find a trade, and you find the trade. Maybe you get lucky. Most times you won't. Right? And so at the end of the day, you're reviewing your trades and you're thinking, what the hell did I see to press the button? And so, yeah, your imagination truly comes into play in the middle of the trading day. Not so much for swing trades, but you have to be aware of that. And after doing that for, I don't know, some of us might do that for a few years before we start saying, that's not a good thing to do. So anyway, so gapping down onto some support, 559. What's the big open interest today? Which isn't so big. Open interest calls, puts, 5,600. Wow. So that's going to be in the money now. Let me go back. Let me see here. Right in the middle of that big red bar. And right there is where it's going to be opening up on top of those pivots. Right on 5,600. So not that it's huge, and it's out like 2 months from now. The largest open interest in put options at 5,600. I mean, today, all expiring in 2 days, 5,600 is the largest open interest. So that 5,600 level, it's not down there yet. And you can see it's right where those pivots are. And so this was an interesting thing. When McGraw would start a few years ago, telling me about Gamma and Varna and whatever, this crazy shit. And the only thing that really came to make sense was this large open interest and the potential for a significant move at these reference points where there was large open interest, which always lined up every time you mentioned it, always lined up with an area of support. So these option strategies that all primarily, if you're a pure option guy or girl, it rotates around Vega and Thea and all of that Greeks. And, all this complicated stuff somehow leads them right to the part on the chart where it makes sense to us as chartists. So once it gets down there, so it's a big open interest, you expect there to be some support because of the chart. And of course, now the open interest. If it doesn't bounce from there and go sideways for a while, same thing as what we would expect, what I explained before, it comes down to support, it rattles around. And if you start seeing topping tails when it's at support and it gets knocked back down, now the mechanics of what the market makers are doing that have sold those options and it begins to unwind helps drive it even lower. So, with a big index that's widely followed like the S&P 500, it makes sense to know where there's a large open interest, especially that's going to expire in the short term. And then intraday, you can see how much volume, in addition, the most active ones are being traded, and they usually act like targets. All right, so here's today. It's here. It would take a miracle, I think, to get back up there. So I think the top side is a no-brainer. Coming down here, I don't think it can get down there today either. To come I don't think so. I don't think it get down there. Rising 20, that's a hell of a ways down, but as always, you just never know. But I don't think so. Anyway, the top side, I think highly unlikely that it's going to go back up, and that's all we're looking for. Going to be plenty of resistance up there. All right, let's flip through the futures here. I'm doing too much talking this morning. Wide range bar down, coming down to minus support, rising 20 MA. I don't put much weight on moving averages on the futures market, even though I look at it just for trend analysis and see where it's at. It's one of the things I've observed, looking at futures markets or leveraged ETFs and looking at those moving averages, like where they can be reliable reference points on, say, the S&P 500, it's not going to be in the same place most of the time when you look at a futures market or a leveraged ETF. So there's something I'm sharing with you that I wouldn't put much weight on a moving average on a reference point. But if it's lined up with support, in this case, minor support, maybe. But this had this little resting period up here for a few days. and now it, back down again. So while it might stabilize for a while, clearly, in the short term, it's bearish. This is still in an uptrend. I don't know if you get your protractor out here and measure fibs somewhere. I'm just eyeballing this from here to here. I guess somewhere around here is about 50%, give or take. So maybe it goes a little bit lower. S&Ps, stronger now. Obviously, the Magnificent Seven are getting beat up, so S&Ps are stronger. Financials did well. Now financials are coming in a little bit. This is likely to come down here. So here's a good example right here. I was talking about, there's no pivot marked there, but on a smaller time frame, you're going to find a pivot, right down here. And so even though it's not marked with a dot or a PL like mine or whatever, when you get a bar like this has got two higher lows to the left and that's got more, you're going to have a pivot in a smaller time frame. So, all right, beginnings of a big stall in momentum, possibly a red bar, the second red bar on the way up here. So we'll see what that does. 5,700. Again, 5,700 in the futures, not 5,700 in SPX, which it's relatively close to. And so as this started coming up, there were some that had targets this year, 5,400. And they're like, oh my God, it's going through that. Better raise the target, 55, 56, 57. And so a lot of them moved up to 56, which now has been tagged. Now gapping down. Our internals, which we covered, look at this, 238 on breadth. Fantastic. But the alignment of breadth and sentiment, as I said at the beginning of the week, be careful. Right? Historically, we know something negative is going to happen. YM, a monster day. I don't know what's with this chart, the signal. I don't know why it's coming out like that since it changed the contract. But here, the Dow had a monster day yesterday. This was the most sloppiest chart anywhere for the longest time. This thing was whipping up and down, up and down. And now we got a wide range bar ending. Transports and everything joined the party. Monster move. That was a short covering, just money moving into what was underperforming, but up against these pivots you can see to the left. So going to stall. Let me get through the rest here. IWM, big bar ending. I got a line up there, so must be something over there to the left. You can see the pivot, 230, gapping down about midway into that bar, obviously negative. And, gold, new highs, silver, dead in the water, interesting. Oil holding for the moment. See this topping pattern, see if it gets turned around. And, others that participated, it brought up the rear of the catch-up trade. Biotechs look great. So that's it. We'll see how much selling wants to unfold here and where it goes. All right. All yours, Dan.
Good morning. Today, MT Live. It's talking about excuse me, gap trading. And so this was a great week to talk about gap trading. There's not many gaps here, but there's so many things that are just vertical, but bullish weekly and monthly. So that's a different subject, multiple time frames. Let's see, YouTube here. These semis are weak, and I just glanced at the Dow 30, and why the heck is Intel bucking the trend here? Look at it, gapping at 36, and semis getting killed. These semis are down because I think, trade war, tariffs, kind of things with the sector in China and all that stuff. So we actually have we got two trades on MU. We're long puts and also have a call spread. So both of those are working beautifully. The roll SPX long above yesterday's high. Yeah, because I don't think it'll trigger in a weak market. But it's a buy setup after a deep retracement. A that was just sloppier is all, and no vol, very light volume. Dar bottoming pattern. I wouldn't be in a rush for it. Oh yeah, somebody on YouTube just talked about Intel also. Well, when you say it may break out, it broke out here, the bottoming pattern. And yeah, today's subject, that's another continuation gap breakout. But it's a big gap, so you gotta put it on a 5 or 15 minute chart and see how it settles down. Schwab here had earnings yesterday. Look at that nasty whackage. RJF also, but this was not earnings. I don't know what happened to that thing. A leg, we actually posted as a long over the high. Continuation breakout. All right, here's earnings after the bill. Down from the close. It's a mess. OMC down $5. That's a big ugly gap. Nothing to do with it. So I keep saying today's lesson. We're going to teach you Greg's 7-step analysis, but I kind of, just for speed, I condense it to two. I'm like, okay, where's it opening? Do I have a pattern based on where it's trading right now? And if so, then you put it in a 5-minute chart and you see how it sets up in the first half hour. So this one, I got no bias. There's no pattern here. So there's nothing. But I'll come back to it. Maybe it takes out a 30-minute high and I do a 2 DTE put spread. Stavos saying Coke breaking out. Yeah, it's a slow mover, but that's what we call an ascending triangle. You got horizontal resistance. You got these higher pivot lows, closing breakout. Yeah, looks higher. Maybe just a slow mover is all. All right, this thing gapped up. So this to me, is like a short-term exhaustion gap. I mean, this was a bullish one, but now it's up from $10 to 1870. And it's rallied all these bars and now gapping up. So that's one I'd definitely be selling into. Yeah, so like I said, particularly in banks, well, banks, transport, so many things. There's amazing bullish rallies. Weekly, monthlies look great, but there's no entry.
Since I looked at that, so you mentioned Coca-Cola. Campbell Soup had a good day yesterday. That looks ready to move up. Kraft is bottoming, maybe a put spread. It's lower price.
What's this symbol?
Ketchup. KHC.
Yeah. Yeah, these slow guys usually don't have any premium, but yeah, we can look nice pre-market. All right, JB Hunt gapping down. So and I said in the green room, regardless of these being strong and coming from a base, I said yesterday, if we got a big old gap, 30-minute low, or a bearish gap, I'll be looking to do 2 DTE call spreads for Friday. So this is a candidate. That's a bearish gap. 95% into that green bar. So my option traders can help me. There's going to be a ton of ideas. Ton that look like this, that went up vertical and are having bearish gap downs. I don't see any prints. I don't like this. It's kind of light volume. I don't like overlapping bars. I'm gonna get rid of that. Yeah, we're in TMUS. Just because of the market gap down, I said sell half pre-market at 184. Now, it is a closing breakout. Looks great. But I did that just because of the market. I can't talk today. All right. This is ugly. ASML 980. Wow, that's a big old ugly gap. Wow, it's gapping over this entire month-long top. That's damaged. J&J up a little. Might go to the 200, but I got better stuff. ELV 530, bearish gap, making this a big upside breakout failure. We'll come back to him. PLD flat, no pattern. USB, same. Extended daily, same. Okay, this one gapping up. This has $1.64. Again, I'm repeating because these are looking so similar. So many banks ripped the last week. They have bullish weekly monthlies with short-term tops. So this is a 30-minute low call spread idea. Now this one was a bearish gap under a green bar. Call spread candidate if there's any juice. There's not going to be any juice with this big gap down. FHM, a mess, but bullish weekly monthly. Same old story with banks. Yeah, ASML. Yeah, a lot, semis is where I think that caused all this market weakness. We had SMH as a call spread, but again, gap's too big. That's a big ugly gap there. Yeah. A gush alarm. This is another oil ETF. And Devon, I posted, we're in Devon. I said you can do another third. So that's triggering. The alarm just went off over yesterday's high. We are in IO. What was it? IEO. All right, so this one's triggering another third lot. We're in the ETF trader.
Let's buy a VZ here. Stop under. We can put a stop under yesterday as well.
Yeah, that's bullish weekly monthly. Yep. Inverse head and shoulder monthly. Look at this 5 FIVE. The president is hitting the road and gave a profit warning. ANF I posted as a call spread, and this could also be a short watch. Just your stop's too big. That's a $9 stop right there. But I gave this as a call spread. Our MU, I said 5-minute high. Well, our puts are 560, and we bought them at 3. So those are doing great. We have a put spread. So we're capping our gains, unfortunately. We would have made more money had, um, you know,
You sold Sienna yesterday, Dan?
yeah,
Nice, good.
yeah, and this Climo right here, the last third.
Mm.
I just said it moved too much in one day. Block is sold a third into this end of day rally. So the AD line gap down to negative 1100. All right, our MU call spread. Let's see where that's at. We should have a massive open game. 137. Wow, it still has some premium. I'm shocked. 137s are still 30. Wow. Diamond's ripping here. I guess ripped up to yesterday's close. Man. And that's not a bearish gap because it's the upper 40%. Greg, Greg, your EPC alarm.
You what, Dan?
E EPC alarm.
LEG mentioned yesterday.
My alarm just went off. Yeah, I posted a pre-market. Greg. All right, let's MU.
Russell coming into the gap fill. Well, Intel's going up, Dan. What the hell's up with that?
I mentioned a pre-market. I don't know why.
The SMCI gap down. That didn't you call spread on that yesterday?
Well, yes, but to leg into a condor, so the put's going against us. My only guess on Intel is they're they're going to be the beneficiary of these trade tariff things. Yeah, so we have yeah, so they got added, it was in the weekend letter, it was a breakout, and then it got added to the NASDAQ 100. And so on the pullback, we did a put spread, and then yesterday we did a call spread. And I had moved stop 30-minute low. Yeah, that makes sense, Ringen. All right, block is still holding well. All right, this A and F. There's going to be no premium. TMOS, yeah, TMOS moved up. Cart up alarm. The midpoint on A and F is 32 cents is all. So we're not going to get filled. Yeah, cart looks good. We sold a third, I think, in this